Hello, everyone, and welcome. My name is Magda Pancel, and I'm the country manager of Dorsum Romania. Thank you for joining us for our fifth Dorsum Club. As many of you are already familiar with, Dorsum Club is an annual gathering we organize in Bucharest to offer us the opportunity to bring together our clients and partners for sharing insights, visions, and to meet each other regularly in an informal atmosphere. The coronavirus pandemic has brought many changes and taken many events online, among others our Dorsum Club. It has forced all of us to find new ways of working, interacting, and living. But besides causing a collective trauma, it urged many digital transformation processes. I have heard someone saying that we went from being the Flintstones to the Jetsons in 9 months. How funny, but also true, isn't it? It is a certainty that digital technology is a key component of our effort to support our new ways of living, working, reaching, and serving our customers. And not only during this exceptional time, but on long run. This is why we own today's webinar around the impact of the COVID-19 pandemic on digital services and the necessity, the challenges, and the benefits of digital transformation. Now, I'd like to introduce our today's first presenter, Ákos Szalai. Ákos is Senior Innovation Consultant in Dorsum. Before joining Dorsum's innovation team 2 years ago, he has worked in FHB Bank in investment services product development. Ákos is known in Dorsum as Mr. Simplicity, as his main vision is creating simple and easy-to-use solutions for complicated business workflows. Ákos is also responsible for our in-house investment academy. He regularly lectures our experts and developers in investment products and practices. Ákos will be sharing with us his thoughts about the topic that is in the focus of his current interests.
Thank you for the introduction, Magda, and welcome everyone to this Dorsum Club. Yes, what I'm going to be speaking about today is how COVID-19 impacted digital investments, and also what the initial few months led up to the COVID-19 pandemic, and how we've experienced at Dorsum that digital investments and wealth management was going through in the past period. So first, just a quick thoughts on what the challenges and trends were during these past few months, years. First of them was the decreasing margins. There was a growing gap between profitability and market volume, and it actually shows that wealth managers are failing more and more to serve their clients successfully. And with these existing business models, and it's either from the revenue side or the cost side, or even worse, from both. So the urgency to change is unambiguous, but the direction was not clear yet before the pandemic on where these players have to move. Also, growing competition is one of the big factors. The fintechs not so much in the wealth management and investment era, although some players like Revolut have trading, some neobanks offer savings and investments, and in the US, quite a few players have moved up to face the challenge of big players such as Wealthfront, Robinhood, Stash, and we're experiencing that these players or similar players are going to be growing and expanding Europe-wide also. So the changing client expectations and generational gaps. This is actually a topic where Dorsum has done quite an extensive research on the future and looking at how the solutions that we provide are going to be relevant for the next 10, 15 years. We can see that the gap of digital expectations between generations is growing dramatically, and that younger generations are influencing older generations. So actually, just looking at how I'm communicating with my family, 5 years ago I was always receiving phone calls, but now my mom is only texting me via Viber or text message. So I think that's a good good example on how these things are progressing, and also the democratization. So retail investors, because they have the same access, they also use the same web platform. They are getting access to these digital tools that also private investors are getting access to. They feel like they should get the same service. So these were the challenges. What we found wealth managers and investment specialists have been facing in the past few years. And just quickly, a few things on the trends that we were experiencing. So naturally, ESG is one of the big trends of the past few years, which consists of environmental, social, and corporate governance considerations for investments. This is true especially for young generations. So for example, of a study in the US in 2018, 61% of millennials said that they actually did make an investment, a sustainable investment that year. And people are more and more concerned about making a true impact with their investments. We see that companies who have switched to a sustainable model won't have to make these changes later, and that's why we think that they're going to be successful over the long run. We see that in the mainstream retail banks, it's starting to appear, these ESG consideration investments, but we still have a long way to go. The biggest issue is that there is no actual regulation on this topic, but we see that in the EU there are a lot of initiatives to change this and to avoid greenwashing and create EU regulations for ESG investments, or what can be labeled ESG investments. We see, of course, digital services have been a big hit of the past few years. And what is really nice to see is that traditional larger banks are now actually facing the challenge of fintechs, and they also take on these newest and most modern digital solutions. So from Dorsum's perspective, it's nice to see that banks are open to stepping up their digital game. We see that in the investment domain, they still have a lot to accomplish, and it's clear to see that it's harder for them to transition into these new digital service models as they are less agile, they have more complicated systems architectures, they have a slower decision-making process, they have less structured data about clients. So we see that they're facing challenges, but actually Dorsum is actually here to help on these topics for traditional banks. And the next and a really interesting topic is the utilization of big data and AI. We see that over the past few years, what players use their big data and AI specialists to accomplish are customized financial plans and asset allocations, and also real-time trade and investment recommendations. This is, again, mostly seen at fintechs, but actually in the US, the first mover traditional players are actually in the market. Schwab provides AI-backed, fully digital wealth management services they've launched this year. And what I think is quite odd, but also very important, that for the investment domain, being contrary to the digital banking services, we still see that the personal advice is still really important, and even for millennials. So while, for example, just taking me, I don't want to go into the bank if I have to get a new credit card or make a transfer or actually anything, I would avoid personal contact. But in the investment domain, we see that even the youngest people are still relying on advice from from real persons, from their advisors. So this is why the hybrid model is the winning combination, we think, because it still builds around the personal trust, the personal relations with the advisor, but it actually provides the advisor with several digital tools, with AI, with big data, and makes their day-to-day job easier and more efficient. What we see is that by 2030, asset under management is about to increase by 25 to 50%, and profit margins are expanding by 25 to 50% within the wealth management industry, where these assets and these investments are going to be driven by AI and other smart technologies. Of course, this is a pre-COVID statement, but it does show the significance of how AI will transform our sector. And what is, again, nice to see that EU is actually doing a lot of new regulations and directives. So, for example, one of the important directions they are headed in is the investor and customer protection. So MiFID II, for example, regulating new areas, for example, the ESG, or regulations which are in connection to crypto assets, and also innovation acceleration. For example, XRD2 is something that on a second level, but is going to drive innovation, because it does make players and banks and financial institutions actually for you to be consistent with these regulations, you will have to provide digital services. So this will actually drive innovation, we think. And the last important trend and topic is the millennials. How our sector and how our industry can face up to the millennials who are just living in a different new world. They are experiencing different things. For example, fishing on their phones in AR and not fishing on the lake. So how do we relate to them? That is a challenge that our industry is facing. And just a few numbers and a few interesting thoughts on millennials. For example, 32% of them envision a cashless society. 77%, which I think is significantly higher than any other generations, would switch to a bank offering better service. So they are more open to switching banks if they see something. Again, a good example can be my dad, who has been with the same bank for, let's say, 30 years, but I switched, I think, after 5 years from that same bank because I wasn't happy with their services. And what millennials are investing in, again, something that is really surprising and interesting, is that they are much more focused on investing in technology and technology companies. As you can see, almost 50% of their investments are into technology. And just based on these facts that I have just listed in the past 2 minutes, again, another really interesting, and again, with the hybrid service, 29% of these millennials are only those who say that they would rather take advice from robots, and 70% of them say that they would actually listen to a human and get advice from human when it's about their investments and their savings. So this was the years leading up to the pandemic, and in the next section I want to talk to you quickly about what the impact of COVID-19 was on investments. To understand this, first, just a quick overview on how it impacted our economy. So as you can see, the global economy shrank by 3%, and this decline that happened in this year is actually described as the worst since the Great Depression in the 1930s. So it is a significant historical event. As you can see, GDP growth rates in the EU and the Euro area have been just significantly dropping over the first 2 quarters of 2020. So you can just see that this pandemic was a really significant event. So what does this mean for our sector? How did the financial institutions, how did the wealth managers react? So one interesting thing about this is that assets under management were down 11.8% by the end of Q1. This is not so interesting as the stock prices and everything declined. But what is actually interesting is that there was a spike for investment managers with trading revenue, because when the big volatility came in March, April, and May over the summer, people who have actually not been trading so much or not have been trading at all moved into trading stocks and investing. And I think a good example for this is I'm sure most of you who are clicking around YouTube have faced the eToro commercials where we see that they are now moving into everyone's face and just pushing their services, because they see that this volatility can actually get people to start investing in stocks, and so this was actually a boost in the trading revenue for investment service providers. But the global industry assets under management by the end of this year are expected to decline by $1.7 trillion. So still we are on the negative side, even with this small spike. So actually we've now had about 6 months since the big drop in the market. So let's see what the results were. Well, probably most of you have been working from home office in the past few months, and I think that a good example on how this whole transformation went down in the past few months. A good example can be when I was in the COVID era started, March, April, we went to home office, and I stopped moving around, stopped exercising, and I'm used to exercise, so it was also really bad, but also felt kind of comfortable. And I think the same was true for banks and wealth managers in the past few years. They knew that they're gonna have to make this jump to digitalization, but they were comfortable with their current services. So you know, I had the urge to go for a run, just as banks had the urge to digitalize, but it wasn't that bad. But when I was locked into my apartment for 10, 12 hours, working from every morning to every evening, finally I just had this, you know, this moment where I said, I just can't take this anymore, and I have to go for a run. And I started exercising, and it was quite a nice summer for me from this perspective. And this is the same what service providers are doing now. They had this epiphany that now they can't get in contact with their clients over the traditional ways, and now they really have to do this jump in digitalization. So everyone was, you know, panicking and getting into digitalization. And good example for this is the number of partially or fully digitalized products or services. So these great figures in the third row of every region, you can see are the end of 2019, and in just 6 months, how significantly the digitalized products and services have been expanding due to this pandemic. So I think this is again a really good overview on how everyone was panicking, going for runs, but from the investment perspective, trying to digitalize their services. So, and now focusing on the wealth management sector, how they dealt with the distance. I think that unlike airlines, restaurants, gyms, wealth managers actually had the chance to continue their business as usual by the pandemic, because they should have been able to do these services by observing social distancing. But we see that their level of digital development just wasn't adequate enough. So they had difficulties in the first few months just to establish business as usual, just to ensure that their basic services were accessible remotely, just to communicate with customers, and not even talking about reaching new clients. We actually did an in-house research project about in Hungary how many security services providers offer online account opening, and we found that only 14% of them had these services pre-COVID. We don't have, unfortunately, the numbers in for after COVID, but this shows how the lack of digitalization before this crisis hit. But now that that we are in this era, looking into the future, we see that now what we see as the risk of investing actually into technology, and especially client-facing technology, has not just decreased as compared to the pre-pandemic situation, but today service providers who aren't heavily and quickly focusing on digitalizing their client service models are running significant operational risks with this. As, for example, second wave is a excellent example for this. We did open up, everyone was getting back to their normal lives. You could say, okay, this is over, let's not invest in digital technology, but we are now again in lockdown, and again we have the need to access these services online. So our key takeaways from the last about half year is that the players have this realization that they cannot any longer avoid heavy digitalization. So they need to now really focus on improving these services. Digital communication is key, and we've been saying that it has been key, and we've actually won the Finovate last year, or it was actually this year pre-pandemic, but it was so long ago I thought it was last year. Yes, so in February with our digital communication platform. So from the providers there was the realization that this is going to be crucial, but players have not realized it pre-pandemic. Now they see that how many clients you can actually access with these digital communication tools. And also it is important to note that now we see that cooperations are strengthening between large banks and fintech companies. They can get quick win projects that complement this remote life that we have today. And we see that the growing popularity for the software as a service model has appeared because it is quick, it is much cheaper than a big implementation project, and it can be a quick win towards customers to implement software as a service, white labeled applications. And what I think is really important to take away from these last 20 minutes is that it's easy to fall back into the same old routine, just as I did in the beginning of the second wave. So I haven't gone for a run in about 2 months. But banks and investment providers need to realize that it's just not a possibility for them to say, okay, this pandemic is going to be over, we have the vaccines, personal communication is going to be back to normal, because clients just got used to digital services. They just got used to that they have to be able to accomplish anything regarding their investment services from the comfort of their homes, from not from personal contacts. So I think that it is really important to focus on what we've accomplished from digital services in the past few months and continue this, and not fall back into this procrastination again, saying, okay, we will just deal with our digital transformation later on. And just a quick thing, we have actually started a COVID influence project in the beginning of this year. It is a software as a service mobile app, which can be implemented in about 2-3 weeks. It creates an easy to implement product, which is something that easily improves client satisfaction. So it's really a quick win project. It is providing just a quick in-depth portfolio tracking for clients who have not had any digital services yet. We've actually launched this with two and actually now 3 Hungarian clients. These 2 are the first movers. As you can see, you don't have to be a large bank or financial institution to implement these software as a service models, as these are actually can be tailored to the size of the organization. And as you can see, 2 smaller firms in Hungary have implemented this product, and we're really proud that we have been able to help them not just with their digital transformation, but also deal with this pandemic and COVID situation. And the exciting news is that this product is actually going to be coming to Romania soon. So we're going to be launching this product in Romania. So feel free to contact me or us or anyone if you'd like to know more about our product. And again, thank you for listening to this presentation. Thank you for the opportunity. I hope I will get the chance to present again next year in person, because last year I was there and it was a lot of fun being in Romania. So just again, connect to me on LinkedIn if you have questions, and looking forward to your questions, and thank you.
It looks like we have a question. What do you think? How the post-COVID world will look like in terms of people's approach to investments?
That's a good question. I think there are several aspects to this. One of them is people who have been struck by COVID-19, people who've lost their jobs or lost their savings. They now see that the thing that investment managers, wealth managers, and banks have been saying to them in the past decades, that investing and saving is really important for your stability. And people who have not listened to this lost their savings now in COVID, as they lost their jobs, as the economy hit them hard. I think now in the future they will see how important investing actually is, as they have learned this lesson, and they never would like to experience this again. Also, from another aspect, I think that the bouncing back of the markets, for example, if we take S&P 500, which has reached the same level as it did in March in about 5 or 6 months, again ensures people that these collapses and these depressions are actually just temporary, and anyone who looked at their investment account and saw that they've lost significant amount of money in those 2 or 3 weeks of March, and now look at their investment accounts and see that they actually have more money than they had in March. I think that's again reassurance that you can feel free to invest, and it's a good direction for you. Also, I think that the digital improvements that are taking place and are going to be taking place in the next few years are going to be just helping people access investments more easily and get investments closer to everyone, even people who are afraid of them, don't understand them, or just don't have experience with them. And actually, it is a goal for us and our team at Dorsum to bring solutions like this to the market and equip banks and traditional players with solutions whereby they can actually bring this complicated world of investments to people in a simple and easy to understand way, where they are going to be comfortable with investments and savings.
Can you tell us more about the hybrid approach of digital investments that you mentioned?
Sure, yeah. So actually the products that we've been working on in the past, let's say 5 years here at Dorsum are focusing on this hybrid approach. What I mean by this, for example, we have a platform for advisors, which is a good tool for them to save on administration time. So again, we still, in this service model or process, the advisors are still having face-to-face meetings with clients, but the time that they needed to administrate their everyday work and just, prepare for client meetings, summarize client meetings, in this platform, it just saves them a significant amount of time and supports them with this technology. Our client-facing solution, again, clients are able to access a lot of information about their investments and do not have to call up, email their advisors. So again, we still recommend that this advisor-client connection is in the middle of the service process, but we again save time of advisors by not having to answer to smaller questions or deal with smaller things. Those things that can actually be accessed on a mobile app or a web platform. And also we have a communication platform, which I've mentioned before, which won a Best of Show award at Finovate. That is actually enabling clients and advisors to even chat with each other, send documents in the chat, send links, which again just saves time for everyone because they don't have to call up, they don't have to schedule appointments for smaller things. And I think that these services are still, while keeping the personal touch in the middle, supplementing both clients and both advisors with digital tools that just make their everyday lives easy. And I think that's the most important takeaway from the hybrid approach. It is still a personal thing, but it just makes everyone's lives and jobs easier.
Thank you so much, Akos.